precautionary measures as directed by the DGCA yesterday. Remember, SpiceJet is close to about 12 Boeing 737 MAX, which is more than Jet, which has close to about 8 of those planes. As of now, as of yesterday, the DGCA had not grounded these airlines. We'd seen many of the other countries ground the airlines, but India had not. But SpiceJet saying that they are taking all the additional precautionary measures as directed by the DGCA. The stock is under pressure on the back of this overhang of Boeing. But let's move on. PSP is a stock which is on our radar. The company's bagged orders worth 600 crore rupees. With that, the total order inflow in FY19 so far stands at 1,400 crore rupees. We're now joined by the management of the company on the phone line, Mr. Patel. Mr. Patel, afternoon. Your order book stands at close to 2,700 crore rupees. With these kind of order inflows, what are you likely to end FY19 with, and your initial outlook for FY20?
I think we will end up at order book of 3,000 crore after 19.
And in terms of revenues?
In terms of revenue, we meant to say this year revenue, we have already declared that we'll be touching to 1,000 crore revenue this year.
Okay.
Hi, Mr. Patel. Good afternoon. These new orders that you've received, which bunches up to about 600 odd crores, can you give us some more colors on what these orders entail? I mean, what kind of margins do they carry, and how long they'll take to execute?
See, the largest order which is included in this 602 is the construction and expansion of IIM Ahmedabad. It's academic block, a sports complex, and some of the residentials to be constructed. And this project has to complete in 18 months some of the areas and 24 months some of the areas. The total project duration, you can say it is 24 months. And the other projects, which is including the one extension of order from MRF, what we are doing in Dahej, that is 52 crore. The second order is one in Dahej already, and that is from Torrent Pharmaceutical Limited to construct their colony at Dahej, and that is 80 crore. And then there is one more order of medical college for Dungarpur Medical Hospital, that is about 90 crore. So these are the major orders which
carry margins of what, 11-12%?
Yeah. The margins will be remain in the same range of EBITDA level at 12 to 13%, which always we have been telling you, and we are maintaining that. So it will be in the same margin.
Okay. Mr. Patel, what is going to be the next trigger or the long-term plans for PSP projects? When we last spoke to you, you indicated that about 85% of your orders come in from Gujarat. You were cautious about lending outside of the state of Gujarat. How do you see the company in the next 5 years? You will end, say, this year with 1,000 crores of revenues. Give us a longer-term picture or the longer-term vision that you have for PSP projects.
PSP projects, we have been planning for 1,000 crore this year, and which we have achieved. And the orders inflow for this year, which we projected and have been telling since in so many interviews, was 1,000, which we have already crossed to 1,400 received orders this year. Next year, our planning is to the extent of 1,500 crore, and the inflow of new orders for next year will be somewhere in the range of 1,500 only. So, in talking about the regions, which still we are exploring Gujarat on a larger scale. Still we have not explored Kandla. Still we have not explored Halol side. That's also a big industrial area. So, we will be concentrated in Gujarat, and we'll be cautiously going out of Gujarat. That will be within the range of 200-300 crore turnover coming out of Gujarat.
What are the new geographies that you're targeting, your venture out of Gujarat?
Venture out of Gujarat, we are mostly concentrating towards south and mid of India. So we are concentrating in Maharashtra and south of India.
This order book from the government is very minuscule at the moment. Could that be hiked up in the coming years?
No, we always say that we will be more concentrating toward private sector and less towards government sector. When there is a good competition, a very fair competition, then only we bid for government projects.
Right.
Otherwise, we'll be concentrating more on private sector.
Over the longer term, will your margins stay around this 12-13% mark, or is there scope for you to improve your margins?
See, improvement can only be possible on some of the projects when we have a very less competition, or where there is a quality requirements and the time requirement where PSP is given some premium. Otherwise, it will be in the same range.
What is the competition like for you? Say for these orders that you currently announce, what is the bidding like? Is it very aggressive now? Well, how is it compared to, say, a year ago?
Now, the competition when we talk about private sector and the project sizes are more than 100 or 150, then the competition for a private sector is usually between me, L&T, or sometimes capacity in some of the regions in Gujarat. Otherwise, the competition is niche. So we think that in private sector, people are more worried about time and quality. So the competition is not so tough.
Just one final question, sir. I'm just looking at Q2 and Q3 of FY19. Your finance cost has remained the same at about 220, 230 odd crores. Likewise for, Q3 of... Oh, sorry. Okay, my mistake. All right, Mr. Patel, we'll have to leave it at that. Thanks very much. I know that was an oversight on my part, but thanks very much for joining in. So that's the word coming in from PSP Infra for now, continuing to focus on the private sector. Orders coming in this time around bunched up of 600 odd crores, but they have already exceeded their initial guidance and perhaps will look to wrap up FY20 at about 1,500 odd crores.